Hello and welcome to Trading with Rob. I am Rob and this is my daily markup for the 5-minute DAX chart for the Tuesday, the 16th of September 2025. So to start off for the day, there was no significant gap on the open. On the chart, I have the open of the day, yesterday's close, and yesterday's low marked, as well as the 60-minute EMA as the dashed blue line and the 5-minute EMA as the blue solid line. Overall, I saw the day as a bear spike and wedge from the open, a 50% pullback, and then a bear trend for the rest of the day with late acceleration into the close of the day. On the start of the day, there was consecutive strong bear bars on the open. They reached support in the form of yesterday's low, from which there was a small pause, and went on to form a wedge bottom slightly below yesterday's low. From a second entry long from the wedge bottom, there is some series of consecutive strong bull bars breaking up from the wedge and also breaking above yesterday's low and the 5-minute EMA. However, there was quite a bit of overlap between the first and second bars, and momentum was getting smaller as the bars got smaller, indicating that maybe this would not be as strong as it could be. However, it was still a 3-bar bull micro channel setup. Might normally expect this to get at least a measured move up. However, obviously in this case we didn't. The market then formed a wedge top, which was essentially a lower high double top with the open of the day, but it also was a 50% pullback of the initial move down, especially when considering the pre-market action, which was also in a downtrend just before the market opened. So then there was two highs. We can then extrapolate a bear trend channel and create a duplicate, drag it down to the bottom using a point in between the 2 points used to create the bear trend channel, and project it down to give us some idea of what might happen later on in the day. Obviously this contained most of the price action for a majority of the day, and then the market reversed down back from the 50% pullback, and after a slight bump up testing the 5-minute EMA, we had a lower high double top form. There was a series of consecutive strong bear bars showing a strong rejection, making lower prices much more likely, and this was repeated throughout the day, creating a series of lower low double bottoms and lower high double tops throughout the day. So another series of strong bear bars, and another lower low double bottom, lower high double top, and another series of strong bear bars as the price is rejected from the 5-minute EMA, down to another lower low double bottom and a lower high double top, and again another series of strong bear bars, down to another lower low, possible exhaustive large bar here late in the bear trend, but again bouncing back up to another lower high double top, and again strong bear rejection, which went on to become a 1, 2, 3, 4, 5, 6, 7, 8 bar bear micro channel, testing the bottom of the bear trend channel. So might normally expect a bounce to test back towards the top of the channel. However, after a small double bottom, there's a failure and consecutive bear bars, again breaking below the bear trend channel. And normally 75% of the with trend breakouts will fail. However, obviously this one didn't, and price continued down in another series of bear climaxes, forming a wedge bottom going into the close of the day, with the final leg being formed of the largest, or one of the largest bear trend bars of the day, very late in the trend, very close to the close of the day, so likely to bring profit taking and likely to be a exhaustive end to the trend. For the day, the best, obviously, the best trades are going to be looking at shorting the market, especially when there's such a strong bear trend and the 5-minute EMA resistance levels are being respected throughout the day. So after strong consecutive bear bars on the open, might want to look for a measured move down of the opening 2 bars, or at least have some sort of second leg. So shorting below a strong bull bar early in the day is reasonable. But once the wedge bottom is formed, given that a lot of swing trades normally set up from either a double bottom or double top or wedge bottom, wedge top early in the day within the first couple of hours, it's reasonable to expect a move up from this wedge bottom here and buying above a second entry, or indeed follow through on consecutive strong bull bars is not unreasonable. However, once price starts stalling just above the 5-minute EMA, around the 50% pullback of the initial move down, it might be better to start looking for a second leg down of this move and looking to short again. So once we have the wedge top and the lower high double top, which is basically a 50% pullback, can start to look getting short again and further follow through. And then once there's another lower high double top, all the prices mostly below the 5-minute EMA, the market is clearly in a bear trend, want to prioritize being short in the market rather than looking to be long. So on consecutive strong bull bars, perfectly reasonable to short, and from lower high double tops, again looking to short under strong bear bars, and that continues throughout the day, really right until the end. So then looking at the summary for the day, we have all of the price action as marked up, and really I would like to just thank you for your attention. If you liked the video then or found it useful, please leave a comment or a like. Thanks again.